right, guys, welcome back to the show. It's your boy UV the Great, and I am brought to you, of course, by the Unique Trading Group. I tell you what, I'm really glad to have you guys back. It's been a couple of days, and we got some things to talk about, all right? It's been really juicy out there, really spicy market out there, all right? And we want to make sure that we're getting the best entries and exits. Real quick, guys, all right? If you haven't heard, I did write a book. It's called The Power of Patience, okay? Mastering Emotions in Trading while Turning Discipline into Income. This is an ebook, a guide that I wrote for people like you, whether you're, immediate, advanced, or just the basic steps or the basic beginnings with trading. This book is for you, okay? And I want you to check it out. This is gumroad.com, and you can get that at gumroad.uvdegreat.com. I'm sorry, uvdegreat.gumroad.com, and you can check out that link in the description, all right, to check out one of the most important books, I think, of this decade, okay? All right, now, to take it to the next level and kick it off, we are going to get into the SPY. All right, today we're going to talk about the four ETFs, the broader ETFs, the MDY, the IWM, QQQ, and also SPY, which is part of those four ETFs. And just to do a recap from the last couple of days, all right, there was a video that I put out called Valentine's Day Bear Trap, all right, and that video was tailored to the SPY. And here we have the SPY right in front of us. And pretty much nothing has changed ever since then, all right? A little bit of choppy action back and forth. But ever since that video, the Bear Trap video, and as a matter of fact, if you guys want to check out that video, you can catch it right here at the right top, all right? And you can recap that video and learn some great things, all right? So we got that Bear Trap Valentine's Day. There was no love for the Bears, all right? All right, and this is, I think, a heck of a halftime show, wouldn't you say? It's the middle of the week. It's Wednesday. A couple of stocks moved in your favorite today. We had some drops, some big moves up, all right? We got a little bit of everything, all right? The Bears and the Bulls could have ate today. However, right now we have upward momentum, and we are in a bullish state. Now, if we want to go back, we can actually go back a couple days, all right, and to just see, each day here, we have been in this range, okay? And today we opened up. I traded the SPY today. I took calls. I bought 612 calls and made money on the out of the money calls. Okay, we have this W shape here, which is a bullish shape, a double bottom, a W shape. Okay, this is a technical bear trap whenever you trap in liquidity. All right, and we rode it up from the 21, which is my call and put trigger. This gray line here is the 21 SMA, if you don't know, and the Bollinger Bands, which is all I pretty much use on my trading view charts. Okay, here at the Unique Trading Group, we like to trade market structure and price action. And if you join the group, the link is below in the description, where we teach you guys how to fish and a lot of valuable information that we give away here for the tier 2 subscription. All right, so back to the lecture at hand. We bought 21 by here. We wrote it up, we scaled out and retrailed these. All right, we always move up our stops. We've been getting to our position. We like to move up our stops to lock into our profit. We always take the money when the market makes it available to us. All right, we got this drop here. I actually waited for this bounce again inside of this here parallel channel. This moment here will be a breakout pullback. Stay with me, watch my cursor. Breakout pullback. All right, let me make this actual bigger. I want you guys to be able to see, all right, for those who are viewing. Okay, all right, and so we took that call here and we took it all the way back up to here. All right, by this time my 612 call contract was in profit, but it didn't quite get all the way to 612. We took our profit here. That was pretty cool. Didn't get back in for this other W shape you see here, okay, and another W shape right here. All right, it wasn't until the end of the day where I decided to get back in. I think right here, got back in at the end of the day. All right, and I rolled these calls back up. Similar setup from earlier. I rolled the same setup. I like that setup, and so I took that. All right, and so that was SPY, and we are bullish. And remember, I said in previous videos that 610 had to show as a place of demand. All right, remember, guys, that resistance turns into support turns into resistance. All right, these are basic trading terms. All right, I like to trade supply and demand. All right, and so if 610 is now the new floor, that is acting as a new demand. And for example, demand means a level of buying where price rejected to the downside, instead went to the upside. So there's a demand for that price, and it got bought up here. Buyers and sellers agree. Okay, now let's move on along. The two stocks outside of SPY that I traded was SLDB, and the Direction of Tesla, TSLL. So let's check out that. We actually bought shares of this company this morning. I received an alert. I alerted the chat. If you're a part of the trade room in the tier 2, then you would have got this alert. We get trades like this day by day, week to week. Okay, so it's really nothing new. We stay humble. We just always make sure we define our risk, our entries, and our exits, and we get to the bag. All right. So here, I have on the Heikin-Ashi candles, but it makes no difference. We've seen that there was momentum building up. All right, and so we hopped into calls as soon as this range here. All right, this range right here. Okay, you know, anytime you see a range, all right, and you see a box breakout, okay, we're gonna make that range right. Let's say we make a range here, all right, and let's say we make another range here. Now all I'm doing is grabbing the wicks of the candles that you see here. All right, these candles, I grab those wicks, and for that one I grab that wick. You know, these give us an area to even mark something on at all, right? So they give us an area of interest, and so we make a block. All right, usually some of the best trades come here when you have these breakouts. Now you see here, price rejected to break above, fell back down. You see here, price rejected and we failed to go back down, it got bought back up. Okay, and we get to that point again where it's that third touch, right? That third moment is a sweet spot. All right, that's a breakout trade. All right, open range breakout, some call it. All right, I took that open range breakout. It worked perfectly fine because I defined my move and what I wanted. Okay, and as soon as I got in, I did an advanced order. An advanced order just means that I take one click to orders. I use Thinkorswim. I click one button. All right, and because I've already set up my criteria for entry, it gets me in where I want to get in at. It puts my stop to protect my money, all right, my risk for my downside, and it gives me a target price for where I want the computer to kick me out, so I don't have to stay in front of the computer screen all day if I don't want to. All right, I did that as I was in profit. Okay, and since I went live today with the tier 2 subscribers in the trade room, I had to be here. So we were here, and as I was in profit, I moved up my stop and I pay myself as the market makes money available to me. Every time the dip got bought, I got into these. I kept right on buying the dip. I did not, of course, buy this dip for the pre-market, after market rather. So I'll be waiting for tomorrow to see what it does. And here again, we are forming another bull flag measured move on SLDB. And so I want to watch for this bull flag. All right, this breakout again for the same scenario we played here. Okay, same things, guys, same things. All right, now let's move on to TSLL. Moving along real quickly. I appreciate you guys' patience. Stay tuned because the rest of the video pretty valuable and you do not want to miss it. Okay, this is the halftime show. All right, halftime show. Got to get ready, market before open. All right, so here we have TSLL. Now this is another stock, Tesla Direction. It moves, I think it's 2x shares, the 2x leverage. So for every move Tesla makes, this makes the move twice. Okay, and so we bought shares at about 19.20 this morning. We like the momentum that we've seen in Tesla, and so we followed. We bought these. Okay, we rode it all the way up here. Same scenario with SLDB. We bought in and we moved up our stop as we were in profit, and shaved off around here. All right, this is where I got out at, seeing some of the first, consecutive red candles, consolidation. So I got out and I let that trade alone. Good money, over with that trade. All right, now the markets have these 4 ETFs, the MDY. We have what we call risk on and risk off, and I check these 4 metrics during the day because sometimes I don't want to day trade. This is one of the metrics that I use. I use these 4 ETFs to let me know where the money flow is. All right, so it's risk on, risk off. If I have most of these stocks above the zero line, all right, I want to buy calls, I want to participate. If I have most of them below the zero line and all of them are negative, I want to more so look for puts, and vice versa, opposite for calls, positive movement to the upside. I want to see a positive above the zero line in order for me to take calls. And so this was the movement today. Big move down, relatively choppy. The Bulls and the Bears could have made money both today. Today was fair game. We definitely had the FOMC meeting. And so a lot of times what you get leading up to these events are choppy movements and some professionals sitting out waiting, or algos are sitting out waiting to process the information or the data that is spoken up by these FOMC members and or the data that is released. All right. So you get these choppy movements. All right. This is the MDY. Which is the mid-cap 400 ETF, and we have the IWM. The IWM is one of the 4 ETFs. This is the Russell 2000 ETF, and we have some of the same things. Choppy movement, all right? Choppy movement. And the small caps are like the penny stocks, right? So the SLDB is like a penny stock, all right? The one that I told you earlier. This is a part of that, okay? And so what you see is these big movements. It was a little bit more stronger than the MDY 400 mid cap, all right? And so you get the choppy movement and a little bit more follow through, a little bit more thrust towards the end, just to give it back towards the end of the day, all right? Tomorrow we do have more data, and we had some earnings releases. Again, these are catalysts. At any time there are big moves, news events, catalysts that shocks the price or the market does not like it well, all right? You have these reactions, and sometimes some traders sit out. They wait until the end of the day for the bigger moves, or they just trade the entry day. That's just how it goes, all right? Moving on along, we're going to go to the MDY, IWM, the QQQ, all right? Let's look at the QQQ, all right? This was a very interesting day today as well. As you can see, this more so resembled the SPY, okay? So the QQQ and the SPY kind of resembled each other today, where you have that big move down, this wedge pattern, right? Overreaction in price. A 2-legged pullback is what you see here, all right? 1, 2, all right? And then you get upward trend, higher highs, higher lows, a V bottom, right? Pull back, all right? A W shape, all right? And there's that neckline that I told you about for that breakout, all right? That's would have been that. Really not much there. You had another one here, all right? You had another one there. But ultimately, the break was around here. Okay, we stayed in that momentum. Another W shape, just like the SPY, all right? And then we rallied towards the end of the day just to give it back. This looks just like the SPY, all right? And that's what we had today, all right? Now, let's check out the Fear and Greed Index. What does that look like? All right. This is a market eternal. All right. I want to know the sentiment. All right. What do we have? Come on. 48. All right. So we are neutral zone. It's fair game. All right. It's anybody's game right now. Okay. There was a quote said by a guy you might know. All right. A guy named Warren Buffett. All right. Be fearful when others are greedy, and be greedy when others are fearful. All right. And if you don't know, I mentioned this a lot in my earlier YouTube videos discussing this type of market eternal and what fear and greed means. And you could just fact check that. Most of the time when you're in fear, you get these reactions where it's time to buy, and then you can check the chart on SPY when I mention these things the following day, and you could kind of get a gist of the consistency of this here methodology. All right. And so that's what I think about that. And what else do we have to close out this video? I want you guys to remember the Trader's Creed, okay? The Trader's Creed is very, very important. Shout out to Mark Douglas. Mark Douglas is in the house, all right? The Trader's Creed, here's inside of my Discord, all right? And I go by this. I read this book called The Disciplined Trader and The Trading Zone by Mark Douglas. And inside of some of his series on YouTube, they talk about the Trader's Creed. And so this is what the Trader's Creed is. I am a consistent winner because I objectively identify my edges. I predefine my risk of every trade. I completely accept the risk, or I am willing to let go of the trade. I act on my edges without reservation or hesitation. I pay myself as the market makes money available to me. I continually monitor my susceptibility for making errors. I understand the absolute necessity of these principles of consistent success, and therefore I never violate them. All right, this is the Trader's Creed. Please get familiar with it, save it, study it, try to remember it, because this, I think, will make more sense to you in your trading journey on down the line. All right, now before we get out of here, I do want to go back to the SPY, because I think most of you guys are trading the SPY, so I want to give you some clear guidance going in tomorrow if you are trading in the SPY, just understand that we had earnings, CVNA. Let's just check that quickly. Earnings came out. We're going to have a reaction from this tomorrow, and it's close to the options expiration, February 21st, the 3rd of every Friday. Big expiration day. Okay, and so you get some indecision, and you have market makers and different hedge fund managers and traders. They are repositioning. All right, repositioning. They're rolling their calls. They're taking a loss. They're trying to get back. All right, a lot of repositioning. So it's going to be really volatile. All right, and then you're going to get some more follow through into next week. All right, Carvana did a major drop even though they beat. All right, Carvana also has a short interest on it. All right, tomorrow possibly scenarios could be one or two. It gets bought back up and we rally to the upside going into Friday, because tomorrow is Thursday, or we continue to the downside for another two-legged pullback, completing a bear flag. All right, to get a better price and see if some of these thirsty shareholders who see these good earnings report wants to buy it up. All right, so let's go back to the SPY. All right, and there also was some other earnings, guys, but these were one of the ones. Carvana was one of the ones that I really paid attention to. All right, so here we go. SPY. Now I see a head and shoulders pattern. Right, here's a shoulder, here's a head, here's a shoulder. Okay, I also see that we are still up. We're inside of this range here. All right, we are still up. We are now bouncing off of this price here, which is at 611. Okay, so 611 right now is holding as demand. All right, we want to see that hold. All right, it's going to act as a decision moment. Even if we wake up in the morning and it's past here, all right, it's going to act for a magnet and price. All right, the bottom of this range, and it could typically fall back to 611 in that range. 610 would be the actual ceiling. All right, so we could go all the way back down into here. Right, so this could be a what they call a breakout pullback. All right, breakout pullbacks are very easy to trade. You want to wait to trap in the liquidity, right? The same as right here. Look, the same V, down, up, right there. Boom. Not really hard, okay? All right, this could possibly happen tomorrow, and you can get another W shape. You want to play that range as it goes up and down, right? Because we have a short week and it's options expiration, so this can happen. You get these around these type of these moments, all right? Theta decay, certain option strategies up here, wild swings, right? People in and out of trades because they understand they're not going to be holding anything. All right, it's a lot happening. All right, so these things can happen. All right, right now we have some in real time at the market price moving down a little bit. Okay, and so you never know with that data that comes out tomorrow at 8:30. All right, so you want to be careful for that. So wait for a pullback, guys. We are still inside of the auction levels that persist of 610, 615, and 620. It used to be 600, 605, and 610. These were your three levels: 0, 50, and 100. It's only three levels, and you play the range of these numbers based on where they're at and what happened previously. If you're already in calls for 612, 610, I'm sorry, then you're probably still in profit as long as it's holding above 610. So if anybody sees price getting absorbed and being bought, those same players are going to buy. Okay, to go back up to where we are. 613 was the high. So we get these pullbacks, it get bought up, and then we retest the high. The same way it happens here. Reach those highs, people take profit, two-legged pullback, price get bought up. Ironically, at the same price it got bought up here at the other zone. Ranges act like magnets. Pay attention, stay with me. And my cursor is another place of demand. All right, right here, looking left. Then we go back to current times. Look, right here, it bounced. All right, so these ranges act like magnets. Price could come back, or we could wake up in the morning with that data at 8:30, and we breach above the 21 SMA, making 612 a new floor on the short-term micro level. All right, to retest these highs. All right, if you guys enjoyed this video, I appreciate you watching. Make sure you like and subscribe. Hit that bell notification so that you're notified whenever I drop valuable videos. And if you found this video valuable at all, make sure you share with your friends. And until the next time, guys, peace.